Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Well, good day, all. Ira Epstein of Linn & Associates with your metals market update. And this is for Thursday, the 28th of June, 2018, getting on to 3:40 in the afternoon. And you're looking at about where you're going to finish. But I made some changes that I want to bring you up with. I've moved to the September silver. You know, tomorrow's the last trading day of June. If you stay in for the July, you could get delivery, so you want to be cautious with that. So we've moved to the Sep silver. The July's right down around 1596. This is trading a bit higher than that. The September copper is now what I'm following. I'm following the OC platinum. And if you're a Bitcoin trader, you've got to move now from the June over to the July contract in crude. If you're going to trade the Brent, you've got to move out of the August now because it's the last trading day. Sounds crazy that the last trading day is in June for an August contract. I don't set the rules. So you want to move over to the Septembers. When we look at a weekly chart of gold, what can you say other than the market fell out of bed? Nothing seems to be giving the market a lift of any type at this point. So you wait and see what it's going to do. In the daily bar chart, you can see this big break that's come in since the market failed in the 1310 area, and here we are at 1249. We're looking at swing lines with a pretty clear pattern of lower highs, lower lows, just reaching on down. You're under the 18-day average, you're under the 100-day average, and you're running at the Bollinger Bands. Now, what do I mean by that? Markets will trade within this algorithm 95% of the time, and often when a trend is about to come. It comes when you get sideways action. I've seen so many times you get fake outs. First it tries the upside, then the downside, but once you get a couple of closes under it, you got to be careful because it means a trend has likely begun. And that's looking back. You can see how it began and what it's been doing this whole time. And yes, this market's well behaved because while it stepped down out of the Bollinger Bands over here, the black line's the Bollinger Band, it then moved to the right-hand side and just continued down. That's a real bearish sign. And you have what's called an embedded reading, where the market has now said it's converted itself again from oversold to locking in that downtrend. And until the red line gets back over 20, it gives me an idea that all rallies in the market will be sold until that event takes place. When I come over to the GLD ETF, same pattern. Embedded reading, everything bearish on it. Not quite the same pattern in the gold miners, the ETF, GDX, but you still have the lower highs, lower lows, and it's just starting to bend down. In terms of the momentum, it takes 3 days, the way that I teach it at least in Bollinger Band, I'm sorry, in slow stochastics, to convert from oversold to locking in a trend. So you've got day one of where they're both under. Day two was yesterday, not the day before. So you're just in an oversold condition. Tomorrow you can convert that. When the July silver, and I'll keep that here as this ratio temporarily, when July got underneath that 1607 level, this just took off to the upside. 78.33 has been the most recent high difference on the ratio. We'll see if it can pop through there on a close. Here's the Sep silver, and you can see it went to the lower Bollinger Band yesterday and again today. In terms of momentum on this chart, both numbers are under 20 today. You see that? They were both under 20 yesterday and the day before. So what you have here is now an embedded reading. You'd need to get the red number, the K line as it's called, over 20 on a close to say the market is ready, maybe to make a run in short covering. Could be all the way to the 18-day average. Is it a buy signal? When this happens, if you lose the embedded reading, people ask me that, is it a buy signal? It's a get out of short signal. There's a big difference between the time, and that's assuming you're short. It may be a signal that you don't put on new shorts at that. There's different ways to interpret it, but when you're under the 18-day average in a futures contract, what I tell people is no. Could you put on option plays trying to get back to that 18-day average to see if it works? Yeah, that's probably one way to handle that. That's up to you. In the copper market, you've got lower highs, lower lows. Look at how this market fell out of bed. I mean, these are big breaks in the marketplace. This is a market that was just up here. Remember where we're talking. Way up here was near the 335, 336 level. You're down 40 cents in this market. And again, this is a slowdown that's happening in China. This is the world scared about trade wars spiraling out of control. We're in trade wars. The question is, are they going to spiral and really get crazy? And we don't know. Tomorrow we're supposed to get one paper that tells us how the Chinese can invest in American technology companies. People will say it's just related to China. It's not. It's related to more countries than that where we think our defense is at risk, our security. So there's more to it. Then what about July 6th? Are we going to see another round of tariffs? China, by the way, did today make some announcements on opening up certain ways in grains that companies can come in and buy. They're talking automobile. I guess you can open up an auto factory there and own it on your own without a Chinese partner in the year 2022. What's that about? In looking at how the platinum is doing, I'm viewing this as a higher high, lower low, riding the Bollinger Band to the downside in a market that if we take a look at the slow stochastics, that's why I always look at these so strong. Both numbers under 20, both under 20, not the day before. So you're just oversold looking to see if the market can convert. And remember, now I'm watching the OC Platinum, not the July any longer. In the palladium market, higher high, lower low, embedded reading. So this is what I talk about. The rallies, when you have an embedded reading, you can get them up there and you go, oh, that's a bottom. Until that number's lost by getting a close over or pointing it up and over 20, you got to be careful because the theory of the slow stochastic is that the market is under selling pressure and will stay that way when they're embedded. We see what happens. In the dollar index, you're overbought, fighting a battle against the 95 level. I'm watching a bunch of analysts saying, the dollar keeps failing there. Okay. It keeps trying it is what it's doing to get through. It's certainly not trying very big on the downside. It came back yesterday in a major manner, up 62 points, and from what I'm seeing, it hasn't given back that gain. It is not trending in the sense of making higher highs and higher lows. You have a higher high and a lower low and you're overbought into a resistance area. That could be what the analysts are talking about. I want to remind you, we have our futures trading kit, and this is one way to get all of our information with just, it comes to you as an email. You just click it, opens up. You're getting my gold reports as they come out, our trader's guide. You're going to get volumes 1 and 2 of technical indicators so that you can understand them, how they all work, where you go with everything. All you need to do is give us a call. You can go to our website at www.iraepstein.com. Sign up for it there. I'm Ira. You have a great day.